Hello and welcome to the final update of the year for my main investment platform, which is Freetrade. So on Freetrade, I have the majority of my money, and of course the aim is always to make as much gain as possible as with any other investor. So on my Freetrade account, I have a general investment account and also my ISA for the past 2 years. So without further ado, let's get straight into the portfolio. So when I log into my general investment account, we can see the price movement over the past month. So barring this peak, which was a deposit, we can see that the stock market has again been all over the place for the past month from November to half of December. So there was a peak of around 22,557, and right now my general investment account portfolio is worth £22,070. So we're going to go through all the shares that I hold at the moment and kind of talk about how the portfolio is doing and my plans for the future. So one thing to note, over the past month, the US CPI numbers and the UK inflation data has come out lower than expected, which led to a slight increase in everyone's portfolio and then a dramatic decrease for no rhyme or reason. So currently I own 0.1 shares in Intel, which is down by 51%. So Intel has not been having the best of time this year, with their valuations going down around 50%. And that is to do a lot with the current economic climate, the fact that people aren't buying computers so much, but also because their main competitor AMD is doing a lot better than anyone had expected. So I have 1.76 shares in CSN, and that is down by 38%. But again, these two, Intel and CSN, not a lot of money put in. So iShares World Dividend is up by 2%, which is pretty good, but again, not a lot of money put in. And this is very scary. Avaya Holdings is down by a massive 98.98%, which is the highest I've ever seen a company go down, and that is down by £885. Of course, incredibly worrying. This might actually just go to zero, who knows, and that is a huge loss to be making. So like I said in my previous videos, when I started off investing, I opened a general investment account and I just put money into a random bunch of stocks, one of them being Avaya Holdings, and of course you can see that I have pretty much lost everything that I put into this. So picking individual stocks, please be careful in doing so, and also holding it for so long, because this is pretty much complete write-off of a company that I've invested in. I could have spent £900 on something else. So Gap, I have 1.3 shares in, and that's down by 1.3%. So Xinhuan Real Estate is down by minus 86%, and they recently had a stock conversion. So I used to own 42 shares, but now I own 4.2 shares. So they kind of opposite of diluted, they concentrated their shares. So Kindle was a free stock, that's always going to be 0%. Rolls-Royce, I have 23 shares in that, and they are doing pretty well at a plus 30. And it looks like there was a blip for a second or so, and it went up by 300% or 200%, and that's probably an error, but this did occur late at night, so I'm not really sure what happened there. Saturno Alcatoire Global Focused something is down by 16.55%, and I have 10 shares in that. So the Vanguard ESG Global Distribution Fund is down by 9.84%. Again, not too much money lost there because it wasn't a huge investment to begin with. Aston Martin is another company that's down a huge amount, so that's down by 91%. That's a loss of £766. However, Aston Martin over the past month has been doing incredibly well with a 40% increase in their stock price, but compared to their maximum, which was around £43+, they are doing incredibly bad. Clover Health, another company which is doing incredibly bad in my portfolio and which I should have never bought, is down by 91.71%, and that's £820 loss, which is not good at all. So Cognite Software, I own 43 shares in that, and that's down by 90%, so that is a massive loss of £808. Not looking good for me, is it? CrowdStrike is a free share that I received for transferring my ISA, and that is down by 42%, which is £67 loss. AGM Holdings, another company which I hugely regret investing in, is down by 84.79%, and that is a £758 loss. Fastly, yet another company that is down by a huge amount, and that is down by 83%, and that's a loss of £746. The FTSE 250 is actually up by 5%, which is not too bad. As you can see, over the past month, it's gone up and down many times, but overall in my portfolio, it's up by 5%, which is pretty good. Alba Mineral, another company that's down by a lot, so that's £594 loss. Corsair, I own 41 shares in that, and that's down by around 50%. One Life, I own 37 shares of that, and that is down by 42.47%, which is not looking good again. Baidu is down by minus 31%, but over the past month it has been doing really well, so that's that, and that is down by £279. Metro Bank, So that is down by minus 16%, and this has over the past month gained a lot. So it's gone up by around, in its peak, around 30%, but now it's around 25% up, which is really good. Shoals, a solar company which had a really good month in November, but now has gone down since then. It is down overall in my portfolio by 17.25%, so that's a £150 loss. So the GSPX, I have 267 shares in that, and that's down by only 1.75%. So what I have been doing is just buying and selling the GSPX because literally there is just so much volatility, and for me it's kind of fun, and I'm trying to make back some of the money that I lost. But of course, in the long run, who knows where the price of the S&P 500 is going to go. I might buy high and sell low, which is not a good strategy. Like I said in my previous videos, it's just something that I personally find fun, but in terms of long-term investing, is probably not the best thing to do. But that being said, look at this graph. It looks like high, 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 and then low, each time a lower low. So if patterns are anything to go by, which they most likely are not, we might be seeing another drop in the S&P 500. And then coming to the new year, who knows what will happen, because whenever a new year starts, people start thinking differently, and we might see a rally in the stock market. Who knows what's going to happen. I'm trying to find a good price to buy GSPX in and just hold it indefinitely. Lastly, in my general investment account, I have 355 shares of the FTSE Japan, and that's down by 1.72%, which is a £147 loss. But then again, Freetrade has not completely calculated this correctly. It is down by a lot more than that because I put around £9,000 in this, so it's more realistically down by around £600. Also, if we go into insights, you can track my performance, which I haven't done before, but my portfolio performance since November 16th is minus 0.95, and this is compared to the FTSE All World ETF, which is basically an ETF of every single stock. So I'm doing very similar. As you can see, the portfolio is doing very similar. However, towards the end, the FTSE All World does go down more than me because I've actually have a lot of the money in cash, and I've been sitting out of the stock market for a while. If I go to maximum, you'll see that my portfolio is doing a lot worse than the total stock market. In this graph, it looks like it's up, but actually my money weighted rate of return is down by 20%. So I'm actually down by 20%. And if I go back to portfolio, you can see that I'm down overall by £4,321, even though if you add up all the losses in this portfolio, I would be down by £10,000. But however, because I made a lot of profit buying and selling these stupid stocks before, I made maybe around £3,000 to £5,000. That's why my portfolio is only down by £4,321 overall. If I click on account, we can see how much cash I have right now. So currently I have £6,930 in free cash, and I am waiting for an opportunity to buy into the GSPX. Probably not the best thing to hold this much cash, but I have my reasons for holding cash right now. The new year in April is about to come soon, so if I have cash now, I can easily just transfer it to my ISA. I think the ISA is such a powerful tool that I have to max out every single year, so holding it in cash is not the worst thing, especially given the fact that the stock market is not doing too good right now. And speaking of ISAs, let's check out my ISA. So the value of my ISA for the tax years of the previous year and this year is £43,765. Now you can see that my ISA is actually up, and it's up by £3,764, which is really good. And the reason why it is actually up is because I adopted a completely different strategy for my ISA. I stopped being a noob investor investing in random things, and I looked into just investing in ETFs, which is a much safer way in my opinion, because ETFs are very well diversified in their own right. So let's have a quick look at the ETFs and stocks that I'm holding in my ISA, and then I can explain what my strategy is for my ISA. So actually I don't have a lot of stocks in my ISA. So Albert Mineral, I have 2,403 shares, which is only valued around £5, I think, and that's down by 59%, which doesn't really make a big difference to me. Mast Energy, I have 554 shares, and that's down by 77%, but then again, the initial purchase was only £60. Rolls Royce is up by 29%, and I have 21 shares in that. The FTSE All World High Dividend Yield is down by 1%, which is not too bad. The VUSA S&P 500, which I bought around £62-63, that is down by 4.7%. So right now presents a good opportunity to start buying the VUSA maybe, because historically the VUSA does go up, and we haven't really seen the price at £60 for a while. I have 3 shares in Disney, and that's down by 30%. I have 3 shares in Meta also, and that's down by 44%. I also hold 72 shares in the GSPX, and that's up by 1%, but again, not a huge deal. So the majority of my funds are actually held in cash. So you can see it says £17 in cash, but that's actually not the case, because the total amount of cash I have have is £42,568, which is quite a lot of money to be holding as cash. However, I do think that there will be an opportunity to buy the GSPX. So if I go into the GSPX, you can see that I have 3 limit orders at £6.21, which might be very optimistic. It might not be, but I'm willing to kind of gamble that it will drop to £6.21, and I can always change my limit orders to, you know, better represent the market and the movements in there. But going by like the previous thing, I think it might hit 621, it might hit maybe 640, and I'm probably going to be buying then and just holding, because I don't think that going forward there's going to be another opportunity for another low in the GSPX maybe. And even if there is, who cares, I'll just put in more money in my general investment accounts and I'll make some capital appreciation like that. So that's my strategy for my Freetrade portfolio. Like I said, it has the most amount of my money in here, and my goal is always to be, of course, making as much money as possible. If I go into insights, you can see that my portfolio performance is up by 16%, which is really good, and I am beating the market. And you can see the market's gone up, down, up, down. However, I have remained very steady, and I have actually profited off some of the volatility. So in terms of that, I am currently beating the market. There is no actual guarantee that I'll consistently keep beating the market. If I go into maximum, it should also be up. Because this is my ISA, the maximum amount you're allowed to put in your ISA is £20,000 a year, so it's very easy to calculate, you know, the differences in my portfolio. Going forward, my ISA will probably not be in Freetrade, not because I hate Freetrade or anything like that, but it's good to have, you know, your money in different places. Even though Freetrade is FSCS protected up to £85,000, maybe in the future my ISA might double, hopefully somewhere down the line, and I don't really want to hold that much cash in just one broker. So that going forward, 2 years of ISA per account sounds quite reasonable to me. I actually do have no doubts that the money in this ISA will keep continuing to grow, so actually 85,000 plus does not seem unreasonable. For that reason, I might have my ISA in Trading 212 or InvestEngine. It will be one of those two. But even if I don't choose InvestEngine next year, I might choose it in the coming future, because, you know, it's good to have your ISAs in different platforms to share out your risks just in case something happens. I really do hope you guys have a really good Christmas. Make sure to check out some of my other videos, and I will see you next year in another video.